In this video, we're going to be analyzing MultiMetaVerse Holdings, ticker MMV. To get straight into it, why are they up over 200% on the day? Now, again, you can kind of see this quite quickly by doing any sort of news search, and you can just see this is because they're opening an equity interest. They're looking to buy or take a 72.8% interest. Now, does this justify 220% move? I'm not too sure. I do think this will be an overreaction. You'll probably start to see a pullback. But anyway, that is the catalyst. Again, if you're a momentum trader, these are the stocks you probably want to be catching and trying to catch that momentum intraday. But me, more as a reversal trader, we'll be talking about key levels to potentially look at this more short bias. And again, if you are a trend trader or a long bias trader, these can also be used as targets. So to get straight into it, we'll be using a standard deviation channel chart. You can see on the left, we have a 6 month. On the right, we have a 1 year. Now what you can see as well, very clearly, we have a $17.75 high. This is a recent IPO. We can see we've popped up to these levels, instantly sold down to less than $1, and now we're starting to get a bit of a pump. So what this reminds me of is really kind of just those hype stocks, momentum stocks, where they just get those kind of few day pops and then they'll just crash back down to their lows. So that's kind of what it seems to me as soon as I opened up this chart. But again, what are going to be those key levels? So right now we're sitting at $3. Now this is our second deviation on the 1 year. So again, this is going to be a relatively key level, and on the 6 month we have a 115. So again, use this as a zone, and we can start seeing, we can even check the intraday how we reacting, and we can see actually this is where we're consolidating now. So actually this would be quite a key watch. Because again, this will probably give us clear direction on where we're going to continue for the rest of the day. If we break to the downside, we want to see a retest of resistance. If that holds, looking to trade that to the downside, most likely continue back down. And again, on the other end, if we can break above it, come back to test it as a support. And again, what will probably happen here, you've got the anchored and the normal VWAP. You'll probably come into those, test them as a resistance, come back to test this as a support, and really considering you've got the resistances here, I would wait for a break of these and then again test that as a support before we can kind of confirm a further move to the upside. So that's what I'd be looking at, again using that range if you're looking at it from more of an intraday perspective. But to continue a bit more of a longer term view, again if we do continue higher, these are where the key resistance will be. We got 425, 450. Now this is our third deviation between the 6 month and the 1 year. These are my favorite levels to trade because if you understand standard deviations, you know that the third deviations have 99.7% probability, or at least 99.7% of data should trade within that data set. So what this means, again, nothing in trading is going to be that accurate. But it's just usually a good indication that if you start trading outside of this range, you're going to quickly reverse back inside of it. So again, that's why I'd be paying attention to that range. Again, multiple ways we can trade it. I think they did have options, so you could be looking to trade it through the puts, vertical spreads, or short the outright shares. Again, it is going to be a hard to borrow stock, so depending on your broker, you may or may not be able to short it. Now, if we did go higher, we do have final levels at 550, 590. Again, I wouldn't be focusing too much on these. Firstly, we've got to break this overall. And again, if we do come here, then these are levels, but they will be relatively harder levels to attack. Now, if we start coming to the downside, again, we talked about this range already intraday. If we break below it, come back to retest it as a resistance and hold. What are going to be those downside targets? And we have 175. Now, this is going to be key. A bit of a psychological level, considering it's the 75 cents. But what is also key coming into this range is it's our first deviation on the 6 month and also our first deviation on the 1 year. Going to be a relatively strong support. So again, if I was holding this range short, if I got short here, this would most likely be my final target where I look to lock in the majority, if not all, of my shares. And if we did continue any lower, just to quickly note, we do have the 95 cents level. Again, pair this with the $1 psychological level. That range will be key because not only is it a psychological level, it's also the gap fill location. And again, we know with trading, the majority of gaps fill, and a lot of the times, if it fills, it tends to then continue in that direction it pulled back from. So it wouldn't be a surprise to come down to this level, and then we get at least a temporary, if not overall, bounce to the upside. So again, those would be targets. If we go any lower than that, the only thing I could even see any thing of even noting would be 38 and 50 cents. Now this is statistical mean between the 6 month and 1 year. This is basically considered fair value on the stock. But again, if a stock is downtrending on a 6 month and 1 year, usually not anything I pay attention to from a long bias standpoint. So again, I'm not even going to pay attention to that statistical mean because I'm not going to trade this long bias. So the way I would use it is if you were trading the stock short bias, that would be the absolute final target. But considering we have to break all-time lows to get there, again, going to be very risky to try and hold into those sort of lows. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.